Hey everyone, welcome back to the channel, where today we're diving into the latest market updates. It's been an exhilarating week for investors, especially with the Nasdaq Composite leading the charge. Let's break down what happened. So, US stocks finished mostly higher this week. The Nasdaq Composite really stood out, gaining a solid 2.58%. Growth stocks outperformed value shares for the second week this year, as measured by Russell indexes. But small-cap stocks lagged behind, with the Russell 2000 index trailing the S&P 500 index by 146 basis points. Both the S&P 500 index and Nasdaq Composite closed the week within just 1% of their all-time highs. Pretty impressive, right? Thursday was a particularly strong day for stocks. The big catalyst? President Trump decided not to introduce new global tariffs. Instead, he signed an order that could lead to the implementation of reciprocal tariffs on a country-by-country basis by April 1st. This move, although leaving some uncertainty, seemed to encourage investors. It buys more time for negotiation between the US and its trade partners. Now let's talk inflation. Wednesday's inflation data came in hotter than expected. According to the Bureau of Labor Statistics, the headline Consumer Price Index, or CPI, rose 0.5% month-over-month and 3.0% year-over-year in January. Shelter costs alone accounted for nearly 30% of this increase. Core CPI, which excludes volatile food and energy prices, also saw a significant bump up to 0.4% from December's 0.2%. Thursday brought even more inflation data, with the BLS's Producer Price Index, or PPI, also rising more than expected at 0.4%. However, some components like healthcare items and airfares showed signs of cooling, which helped ease some concerns. Federal Reserve Chair Jerome Powell testified before the Senate Banking Committee, highlighting that while progress has been made in bringing down inflation, the job isn't done yet. Chicago Fed President Austin Goolsbee echoed this sentiment, calling the inflation figures sobering. As a result, futures market expectations for the next rate cut have moved from September to December. Treasury yields were quite volatile this week. The benchmark 10-year Treasury yield hit an intraday high of 4.66% following the CPI report, but decreased later in the week. Municipal bonds underperformed U.S. Treasuries after the CPI print, but there was a partial rebound on Thursday. Interestingly, investment-grade corporate bonds outperformed Treasuries. While issuance was light, the demand was strong, with only 2 deals being oversubscribed. Higher yields and lower supply drove secondary buying, and the high-yield bond market remained resilient. Let's wrap it up with some index figures. The Dow Jones closed at 44,546.08, up 242.68 points for a 4.71% gain year-to-date. The S&P 500 ended at 6,114.63, up 88.64 points for a 3.96% gain year-to-date. And the Nasdaq Composite finished at 20,026.77, up 503.37 points for a 3.71% gain year-to-date. Not to forget, the S&P Midcap 400 and Russell 2000 also showed notable performances. Alright, that's a wrap for this week's market update. Make sure to hit that like button if you found this video useful, and don't forget to subscribe for more updates. Thanks for watching, and I'll see you in the next video.